Yeah, I think part of it is because people look at Bitcoin to first and foremost compete with gold and rest of the precious metals category. And in that lens alone, it's empirically true that Bitcoin has lagged a little bit this year, more so than it probably would have been priced for. And of course, the price action beyond Bitcoin has been really, really quite poor. So I would argue still that Bitcoin is probably the only categorical crypto asset that has found product market fit that is globally and widely accepted at large, both across retail and institution. I have a hard time to say that is the case yet for almost any other crypto asset.
In a moment when markets are gripped by the urgency of an AI-driven future and silver is stealing the spotlight, Jeff Park steps back to reconsider what Bitcoin truly represents. He notes that Bitcoin's recent underperformance isn't a failure of its core idea but a reflection of a shifting cultural current, one that has redirected national and investor energy toward technologies seen as essential for survival and global competitiveness. In contrast, Bitcoin's earlier momentum was tied to a strategic narrative that has temporarily lost its place in the hierarchy of national priorities. Jeff Park emphasizes that beneath all the noise, the heart of Bitcoin lies in its philosophy. For its most committed supporters, the real appeal is the pursuit of sovereignty, neutrality, and transparency, values that carry meaning far beyond daily price movements. He points out that while Bitcoin culture has often leaned into scarcity and fear of debasement, that framing misses the bigger picture. The mindset Bitcoin teaches, long-term thinking, disciplined decision-making, and personal responsibility, can serve as a path to abundance rather than a retreat into pessimism. Jeff Park ultimately argues that Bitcoin's greatest power may be the mindset it unlocks, not the numerical supply cap itself. With emerging systems like prediction markets showing real traction and new tools for digital autonomy rapidly maturing, he believes this is the moment to build on Bitcoin's foundation rather than stay confined to it. By broadening the opportunity set and embracing complementary innovations, individuals can elevate their sense of agency and engage with a future defined not by scarcity but by expanding possibilities. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Yeah, I think part of it is because people look at Bitcoin to first and foremost compete with gold and rest of the precious metals category. And in that lens alone, it's empirically true that Bitcoin has lagged a little bit this year, more so than it probably would have been priced for. I think silver is having an incredible year where, of course, there's been decades when silver did nothing. So it's also kind of over a long period of time, silver is not that exciting, but it's up, more than 60% this year based on a lot of things, beyond just being a precious metal for industrial uses. And because of these elements where there's so much growth that is happening that is driven by real narratives that isn't focused on Bitcoin. Because if you think about Bitcoin, the focus on Bitcoin's growth is monetary debasement. The things that are driving markets today in the optimism behind AI is a seeking for better productivity gains that are like a little bit antithetical to Bitcoin. So if you think about the culture in which people are investing for Bitcoin versus the optimism that you otherwise see in high tech growth opportunities, I would say almost that mood is not even compatible. And right now what we're seeing is an over kind of winning of the optimism behind the AI gold rush. I don't even know if it's optimism in the sense that people are really excited about it, but there's almost an existential need for AI to succeed at the national public and private sector that is now superseding the national interest for Bitcoin to win. Because if you think about why was Bitcoin so exciting pre-Trump, it was this idea that Bitcoin is a national strategic interest that people are going to rally around. And a little bit of that energy has been sucked away because it's AI. AI is the thing that has now found its place where it's a make or break kind of moment. We have to go all in. And that is in itself creating a lot of that energy that I think Bitcoin wanted. Yeah, look, it's an exciting moment. It was a long journey and the sentiment in crypto can change very quickly over time. But what I know deep in my heart is that there is a core centering that is amongst us, which is a cultural value proposition of what Bitcoin represents to us beyond just the price. And if you think about really hardcore Bitcoiners, what they're really driven by is a sense of self-determination, right? They want control for their own destiny and their own outcomes, and they want transparency and neutrality, and the ability to basically be a sovereign individual. This can apply to so many things in life beyond just buying Bitcoin that I think is almost pricelessly more important than how much money you made buying Bitcoin day to day that goes up or down. I mean, we'll all think it's going to go up, but we shouldn't judge the quality of a mission based on kind of just the monetary gain and losses alone. I think there's a greater kind of value that can be had. And one of the bigger misgivings in Bitcoin that I've always felt is that it tends to be a little bit pessimistic about the world, right? It's about this idea that debasement is going to lead to nihilistic outcomes. And the thing that makes Bitcoin useful is the scarcity. So we all have to fight each other to have the scarce thing that no one else can have. And anytime there's an ETF or options, oh my gosh, it's paper Bitcoin, it's coming for me. Like this idea is very much rooted in scarcity. But I think what you and I have imagined is Bitcoin can represent so much about the abundance of the things to come, not because Bitcoin itself is abundant, but because the way you can train your mind to appreciate Bitcoin will teach you a skill that is so valuable to think about the world in such an abundant way. So we've talked about things like predictions market that has now found product market fit now than I would say back even 6 months ago, where the clarity of how it will come to the US market has been a little bit challenged. Now we have Polymarket on your phone. So this is a moment that has arrived, and equipping people with the ability to have a sense of self-determination to rise above it all is actually how I think we can really change the world. And Bitcoin can play a role, but we can compound on top of that with a lot of different value accrual mechanisms that are possible that I think should be really exciting. And all of us should broaden the aperture to think about the opportunity set beyond just the asset of Bitcoin.
Jeff Park explains that while both AI and Bitcoin recognize the value of energy, compute, and monetizable power, the outcomes they produce differ sharply. AI delivers visible, immediate productivity gains, especially for workers and companies in developed markets. Bitcoin's utility, by contrast, is most evident in emerging economies facing hyperinflation or unstable financial systems, places where access to a neutral, censorship-resistant store of value matters more than climbing a corporate productivity ladder. He notes that in the US, Bitcoin often appears more like a vehicle for wealth creation because Americans already benefit from a functioning financial system. Jeff Park also highlights that these institutional developments complicate the broader mission of crypto. Stripe's USDC payments may offer marginal savings domestically but deliver transformative value for global remittances. Citadel's Ripple investment raises ideological tension, and BlackRock's tokenization model focuses on streamlined back-office operations rather than decentralized ownership. All of this contributes to uneven sentiment across the crypto ecosystem. Despite these challenges, he argues that Bitcoin stands apart as the only crypto asset with clear global product-market fit used by institutions, trusted by retail, and essential in regions where financial infrastructure is failing. While other crypto assets may eventually find robust use cases, they remain in the exploratory phase, still searching for durable functions and meaningful value accrual. Let's get back to the interview.
There's definitely an intersection on what you just highlighted in that energy is valuable, and both sectors recognize this. Both recognize compute and power is important, and it can be monetized. Where they differ is that, at least within the construct of productivity gains coming from AI toolings, those things have utility that you can see today. It's pretty palpable that it's changing people's lives. With Bitcoin, you can't see it as easily here in the US because, again, we're lucky to have a financial system that functions really well, that we don't really need to think about Bitcoin existing or not having a big difference in your life. But if you ask others in the emerging markets that actually are experiencing hyperinflation, they would probably index to Bitcoin being much more valuable than whatever productivity tools they're gaining from becoming an S-tier employee or employer from the A-tier that they were at today. Meaning, the story of AI is actually pretty elite. the story of Bitcoin is the opposite. It's meant to help those at the very bottom. And so in that sense, the constituents are really, really different. And Americans just happen to live in this middle ground where Bitcoin is not predominantly being used for them in that way, beyond the fact that it's a little bit more about like wealth creation. So I think that's important, like context to have in mind. At the same time, like, you know, what's happened with crypto as an industry within the institutionalization that's been happening is maybe moving in a slightly different direction than the original ethos of Bitcoin too. So take, for example, like the three major players that I think have made splashes this year for coming into crypto in a mainstream way. You got, first and foremost, Stripe, right? Stripe is coming out. They've launched Tempo. They're going to compete in the payment processing lane as well as money transfers. And just 2 days ago, they announced their pricing for USDC transfer is going to be 1.5% for payments. 1.5% is definitely cheaper than IC fees, maybe by half. So yes, you're gaining some benefits, but man, you're still paying 1.5% to do a payment processing that otherwise crypto would have said should be well below like 20 bips. So what exactly is the purpose of USDC in the way that Tempo is being built by Stripe? It's not super obvious that the value proposition makes sense for Americans. Again, like we are probably not going to use Stripe to buy stuff if we can just kind of do it in different ways where it's not a huge difference versus like a credit card where they get rewards and stuff. What matters is actually global remittances, right? Like that's where the utility comes from, because there you're paying 8 to 9% just to move money around the world. And maybe there's an option to pay orders of magnitude less. So is that good for like crypto? Is it good for Americans? Is it good for emerging markets? Like now we're starting to see like there's just different beneficiaries and losers potentially on the relative value proposition. And then you also have Citadel. Like Citadel has come in and made a variety of interesting investments. And the latest was that they invested in Ripple. And, you know, many people will throw their hands up in the air and have controversial opinions about what Ripple means to this industry. But it's the fact that one of the largest checks that they've ever written went into Ripple. And so is that good for crypto? Is that bad for crypto? I think it just generates a lot of like unease about like what is the long-term mission of where Bitcoin and crypto is trying to go. And same, I would say BlackRock being the third player that has made a splash in the space, not just for the ETFs, but because now they are staunchly behind tokenization as an effort that they want to endorse. And if you listen very carefully about how they talk about tokenization, you'll still see that it's not totally this like distributed ledger system of asset ownership that has been the manifesto driving crypto venture capital from 7 years ago, because BlackRock is mostly focused on cost reduction. They're thinking about tokenization to get rid of a lot of these inefficient back office functions and having systems like that can speak to each other more, but not, I would say, necessarily make it like permissionless. So there's a gain of function that's happening from an efficiency perspective, but from an asset ownership perspective, it's still very much a controlled garden in which they want to be the ledger, right? And that's natural because they are a financial institution that has to serve a certain function within the regulatory arena that we have. And so is that like the tokenization that we imagine we would have where we have self-custodial aspects of it? You know, it's a little different. So I think all these things are kind of coming into the picture a little bit where it's affecting crypto sentiment broadly. And then, of course, the price action beyond Bitcoin has been really, really quite poor. So I would argue still that Bitcoin is probably the only categorical crypto asset that has found product market fit that is globally and widely accepted at large, both across retail and institution. I have a hard time to say that is the case yet for almost any other crypto assets. Not to say it couldn't happen, but it's still very much a discovery, a journey of finding functions where there's gains to be had that people are able to back and find value accrual for themselves in participating.
AI delivers fast, visible improvements for people and businesses in advanced economies, while Bitcoin's value is felt most strongly in places where financial systems are unstable and inflation erodes everyday life. As major institutions reshape crypto with models built around efficiency, cost reduction, and controlled environments, the space drifts further from the open, permissionless ideals that originally defined it. These shifts highlight how different groups benefit in different ways, raising questions about who these technologies truly serve and what direction the broader ecosystem is taking. Despite the uncertainty and changing narratives, Bitcoin remains the one asset with clear worldwide utility, supporting those who rely on it for financial security and standing as a steady reference point in a landscape still searching for lasting purpose and real, durable use cases. How might Bitcoin's role evolve in emerging markets as institutional involvement in crypto continues to grow and reshape the industry? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.